Thank you. Welcome to all our delegates on this special session on SMEs, and particularly talking about the challenges SMEs have gone through the COVID period that we've just experienced, and then switching over to how businesses have pivoted in this sector and the future we see ahead of us, learning from the lessons of the pandemic. Again, a special welcome to all the delegates that have chosen to be part of this session this afternoon. Greetings to you all from Bujumbura, a beautiful afternoon here. And I'm joined on this panel by very close friends in the sector. Most of them are clients to TDB. And in no particular order, we have Clive Msipa from Zimbabwe at Microfinance. We have Julian Quanjico from FKN Leasing in Kenya. We have Taz Chaponda from Malawi, and Miss Lilian Muramba joining us from the Grassroots Business Fund out of Nairobi. I'm going to ask my colleagues to, perhaps before I do, let me introduce myself as well. My name is Andrew Bamuje. I come from the Trade and Development Fund of the Trade and Development Bank. It is a fully owned subsidiary of the bank. And our role really is to innovate in the space of SME finance from a DFI perspective, and in particular impact this sector all the way down the value chain of financing to the sub-borrowers at a meaningful level through concessional financing products. The fund has so far invested across the region, in particular a couple of transactions in East Africa through the Grassroots Business Fund. We've done a transaction with Mr. Clive Msipa at Untu in Zimbabwe, and we are just concluding one with Mr. Taz Chaponda in Malawi, specifically targeting agribusinesses in Malawi. May I start with Mr. Clive Msipa? A quick introduction in a minute. Yourself, where you come from, and about your business. This is the opportunity to sell your business as well. Thank you.
No, thanks, Andrew, and it's both a pleasure and an honor to be on this panel. So by way of introduction, my name is Clive Msipa, and I'm the CEO of Untitled Chapter. Untitled Chapter is a microfinance institution registered as a non-bank financial institution here in Zimbabwe. We've been going for the greater part of 12 years. And our specific focus is funding on the credit side as MSMEs. We've largely focused on this clientele in this 12 years. And our funding model is mainly out of the capital markets. So a big part of our funding is a corporate bond program where we've collaborated with TDB. And we also get a fairly significant portion of our funding from the commercial banks as well. So yeah, in brief, that's me, and that's the business that I currently lead.
Thank you, Clive. Let's move on to Madame Julian. You are muted, Julian.
My apologies. Yeah, thank you, Andrew. It's also a pleasure to be here in this panel. So my name is Julian Quanjico, and I'm the managing director for FKN Leasing. So FKN is an equipment financing company, and we finance the MSMEs with a key focus on the agriculture sector. And in the agriculture space, we finance the whole agriculture value chain, that is from production to transportation, the storage, agro-processing. And we also look at other sectors, but agriculture is really our core. Then we have a sister company, Tanzania, called EFTA. And at group level, we have a group, we are both subsidiaries of a group called EF Africa Group that's based out of Mauritius. And the group is looking at getting into other markets like Zambia, Uganda, Malawi, and other African markets. So at the group level, we have shareholders who are also really focused and who have been players in this market, in African market. One of them being KFW. We also have DEFCO as one of our shareholders. We have Small Foundation, we have MIDA, and other shareholders that are really focused on supporting the SME sector. Thank you.
Thank you, Gideon. And next to Lilian. Lillian, you're muted. All right. Taz.
Yes. Good afternoon, everybody, and thank you, Andrew. My name is Taz Chaponda. I'm the Managing Director of MIKE. MIKE is the Malawi Agricultural and Industrial Investment Corporation. We're a local DFI based in Lilongwe, and what we do really is catalyze investments, de-risk investments, and prepare projects in this market with a big focus on agriculture, agribusiness, and light manufacturing, amongst others. So it's a privilege to be on this panel. Back to you.
Thank you, Taz, and welcome once again. And last but not least, Lillian.
Thank you so much, Andrew. Good afternoon, everyone. My name is Lillian Mbramba, and I'm the Regional Director for Grassroots Business Fund. Really honored to be a part of this conversation today. I think we're all players in the agriculture sector. So looking forward to having a lively discussion. Just by way of introduction and just to provide context to our discussions today, Grassroots Business Fund, we are a global impact organization. We've been investing globally since 2008. And our mission in life is to support underserved SMEs. Most, if not all of the SMEs that we support have close linkages in rural and semi-rural communities. So they either have supply arrangements in the case of our agribusinesses and artisanal companies that source from smallholder farmers, or they are enterprises that are creating products and services specifically for marginalized communities. So we support them by providing a blend of long-term investment capital, and we are big at mezzanine finance. And we blend that capital with technical assistance, which oftentimes is just as much needed as the capital. Yeah, so maybe I'll just stop there and hand it over back to you, Andrew.
Thank you very much. And to our delegates, you probably noticed by now that we have a great blend of professionals, industry players on our panel this afternoon. We do also have a great diversity of countries. So we expect to hear lots of feed from each of them about how the individual markets have experienced the pandemic and how they are pivoting their businesses to build back better. So we all note that post-pandemic, as we build back, the SME financing gap has even widened. So we're talking to greater than 5 trillion United States dollars. And of course, the bulk of that is in emerging markets like ours. And we know that we need to play a role to build back better and do our best to crowd in the much needed financing to our MSMEs in an innovative manner that can enable us grow back and even grow our sectors even the more. So our first round of questions to my panelists will focus on how the pandemic has specifically impacted your businesses, and listening to how it has impacted your greater operating environments. In particular, I would love to hear more about how demand for your products has been impacted, your staff complement-wise, and in terms of how they've responded to the pandemic in order to reach your customers, your outreach. We want to hear about for those who run microfinance and other similar entities. Have you closed branches? Did you open new branches? How did the pandemic particularly affect you? For our colleagues in Zimbabwe, Clive, would like to hear how this particular situation, on the back of what we know is a tough macroeconomic environment, has impacted your business. From a regulatory point of view, how are your portfolios performing? We want to hear about your non-performing loans and how you're managing that. Is the liquidity shrinking? Did the liquidity shrink in the markets for those that borrow from the local markets, among other things? So I'll start with Julian. Yes, over to you, Julian.
Okay, thank you, Andrew. So for us, we actually set up in Kenya in the middle of the pandemic. So we set up shop in October of last year. So we got in here when the pandemic was it was really hitting, and markets had closed, and there were lockdowns everywhere, and the clients had already started directly being affected by feeling the effects of the pandemic. So for us, what I would say is that by getting into this space at that time, it was really, we didn't have any other way. So we didn't have a before and after. So it was really, we just came in and found the situation the way it is, and fully took advantage and adjusted our business to be able to cope with it. So in terms of reaching our clients, it was really hard to get to talk to our clients. As I mentioned, we focus on the SME sector. And I believe it's the same in the other African markets, where the SMEs really want you to be there. They want to have physical meetings. So that was really a challenge for us. So first of all, if they knew us before, probably that would have been different. But now we are new, and we have to talk on the phone and introduce ourselves. So that was really, really a challenge. So we have to really devise ways of connecting with the clients. But I must say it wasn't easy for us in terms of even getting the clients. These are clients who are already distressed. So I would say for us, it was a good time to come in, because we are not a DFI, we are not a bank. So we were able to get into this space where the clients were already starting to get stressed and they needed support. So it was a very good opportunity for us. And we've actually seen a lot of growth in the SME sector with our business. We've grown actually more than probably traditionally would have grown. And yeah, and maybe what else I would say about in terms of liquidity. So you're already meeting a stressed client and who is already stressed out of the bank, and you're trying to tell them that we can help you provide for you financing, and you look at the financials, already they are bad. So, I mean, we started at a very low level, but also a very interesting level with the clients. But again, the clients who see us as we were there when they were really depressed and in need have really been good and committed clients to us. But also, maybe to say that because of our shareholders who have been in this market for long, so we're not really new per se, because our shareholders have been playing have been supporting the SMEs from a long time ago, and I think by the names that I mentioned, they've been there. So it was also intentional for them to come in at that time to provide the equipment financing that is required by SMEs for their production. I think maybe I'll stop there for now. Thank you.
Thank you, Julian. Before I move on to Lillian, I probably just wanted to get into a practical situation. So here you are in a startup situation in Kenya, and you don't pack your bags and leave, right? But you're able to see opportunity, you focus and leverage the distressed assets and turn that into business. Let's get into a little bit of how you did that exactly.
Okay,
so that our viewers can get a better feel of the practical side to that. Thank you.
Okay, so first of all, what we did is, as I said, it was very hard for us to reach out to these clients and connect with them at first. But what we did is to use partners. So we got into partnerships with different organizations, being in the space for agriculture. So you'd imagine like we're looking at the dealers or the companies like sell tractors. So we got into partnerships with those ones. We got into partnerships with millers, companies that are dealing directly with the millers. We got into partnerships with companies with the dairies, and other strategic relationships, partnerships like the EAGC. GAGC are directly linked to the farmers. We got into discussions with AGRA and other partners that are directly linked to our key sector. So using those channels, they most likely already knew the clients that have need, and they connected us. And it's easier to, I think for anyone, it's easier for you to be introduced by somebody who you already know historically, especially when you're not having a physical meeting. So that's what happened. But in terms of even, I would even just try to start to touch on even trying to get funding. Yes, we have the group that is funding us, but it's not sustainable to get funded by your parent throughout. At some point, you need to stand up and work. So we also have really gotten a lot of. We struggled to try and get support from the local banks. And being a startup, you're still new, you started making losses. The industry you are in is perceived by the financiers as a very risky sector. So it's been quite a challenge. So for us, what I see is that we can only go up. I mean, we've seen a lot of the challenges that can be in that space. Thank you.
Thank you. Serious experiences. And just one little more. So here is a farmer in real need of equipment, needs a tractor, but is distressed, has a loan with a commercial bank out of Nairobi. And here you are bringing in equipment with an additional cost to the farmer. How did you structure this type of transactions, layering on top of an existing facility?
Maybe what I'd like to say is that I think the SMEs are really resilient, and the agriculture space, if you look at even the statistics from the Kenya Bureau of Statistics in Kenya, you'll see that industry is actually one that was very resilient. I think for one, because people have to eat and production has to happen, and they were very well favored by the weather. So most of those risks that were there were really, some of them were real, but some of them were perceived. So maybe to be specific to your question, so we'll get the farmer. So it's not like they're looking for an additional tractor. So it could be a farmer that was probably even in the middle of acquiring a tractor through a bank, and banks cut off this transaction because of the pandemic. So for us, what we do, we actually are very patient. Again, from not being a bank, we have some leeway. We are very patient with the customer to sit with them, understand their plans, and ask them, do you really need a tractor at this point of your life, or what do you require? And if you want to get a tractor because you say that's all you can afford for now, do you need something else to help you generate revenue? What other business are you doing? So we had very detailed discussions, and we have very good stories, especially from the Rift Valley, from the Mount Kenya region where the farmers are, where we were able to finance them and actually divert them from what they thought was what they needed at that time. And I believe next we'll touch on capacity building later. So financial literacy. So those are things that we really had to get into to be able to reach into these clients, to be able to tell them to organize themselves, to arrange their cash flows. And so we had a lot of discussions with the farmers to be able to do that. And not just farmers. So we have millers, as I say, and agri-processors as well.
Thank you very much, Julian. That's very practical. I'm sure we will benefit from you for the rest of this session. For now, let me move on to Lillian. I know that we have been communicating over the last 1 year. We've had some conversations around the challenges in your market through our $1 million facility, but of course, you're a much bigger fund. You're managing investments in several markets, and here is a lockdown. What then happens? How has this been for you?
Yeah, so as I said before, majority of our portfolio, I think it's more than 2/3 of our portfolio is in agriculture, and that was a bit of a saving grace. As Julian had pointed out, really what we saw was, I would say, low to moderate impact on our agriculture processors and exporters. And that's because, as it's been said before, especially for the food one, people still have to eat. Most of the disruptions really came through the supply chain. So we saw as borders were getting locked down, even within Kenya, where counties were getting locked out, our clients were having trouble bringing inputs in through the ports and exporting their products out through the different borders. We also saw some interesting shifts in customer preferences in the export markets. So, for example, we have interest in tea in the existing portfolio, and what we noticed was as customers were being locked down in Europe, that the preference changed really from coffee to tea. We started seeing more demand in tea. However, India, where they were experiencing much more labor market disruption, which really impacted the supply of tea globally, which then in fact impacted our portfolio. So it really shows that the interconnectedness of the COVID-19 pandemic and how some of those factors that were happening in other parts of the market had a real effect on SMEs, even in small SMEs in East Africa. Nevertheless, I'd say low to moderate impact. Now that's sort of on the existing portfolio, but as well, we were coming onto the market with the new facility that we're working together with CDB on, targeting agribusinesses, youth-led or women-led agribusinesses in Kenya, Tanzania, Uganda. And in terms of demand for the kind of product, which was medium-term loan, really to finance working capital and capital expenditures, we started to see just a shift in the demand pattern from our typical sort of pipeline panels. Traditionally, Kenya is a very big market for us. More than half of our portfolio, half of our demand comes from Kenya. But as the East African countries were deploying different levels of severities of the lockdown, we saw sort of demand shifting in some of our smaller markets like Tanzania and Uganda, really coming up, having much more interest in a bigger proportion of our pipeline coming from much smaller markets, as Kenya really went into much stricter lockdown relative to the others. But I would say in general, we saw that as an opportunity to really bridge what looked like at that time that there may be a liquidity crisis. Lenders were being quite tight and extending credit. We are coming in as an alternative financier. And because we have that ability to blend, because we can do technical assistance to sort of really work very closely with our portfolio companies, both the new ones and the existing, to help them understand how to manage through this crisis, how to manage their cash flows, to focus on value addition, on making sure that they're relevant even in a post-COVID world as much as we understood it at that time. I still think it was an excellent opportunity to be in the market at a time where there's just so much uncertainty, and financiers are taking a bit of a traditional financiers are taking a bit of a sit back as we watch the crisis unfold.
Sorry, I was talking to myself. So here the borders closed. Kenya is in different levels of lockdown. How did that impact your pipeline conversion? And how would you then do this over the internet without getting in physically to do your due diligence and make sure you're getting the right transactions on board?
Yeah, so in Kenya, I would say there was really reduced appetite for debt, especially 3 years for an SME. As you know, it's a little bit on the tighter side. And so we saw companies say, hold on, it's April, May, when we were beginning to speak with them, really saying, hold on, I am supplying schools. Schools, we had closed for over a year in Kenya. I am exporting, but cargo rates had more than doubled at the beginning of the pandemic. So really, let's hold off on discussing that right now because there's just so much uncertainty in my business. That's really what was happening in Kenya. In the other markets, we were also locked. We couldn't travel to Tanzania or Uganda. But yet we wanted to make sure that if there was demand and opportunity elsewhere, that we were actually actively in those markets trying to close on those opportunities, which we did in Tanzania, as you know. We just had to activate our partners. We have a full East African team, meaning there's somebody who's native in one of the other, in the 3 countries in which we are actively financing right now. And that really helped us to be able to activate quite quickly networks and partners in the other 2 countries where we couldn't travel to, and use them as an extension of our team to really be our ears, boots on the ground, be able to have the face-to-face meetings. A lot of the small businesses, as you know, are quite relational. As much as we did virtual tours, having entrepreneurs videotape the factory so we can verify existence, but we had to supplement that with on-the-ground partnerships that we had activated, because we know much of the discussions and much of really the due diligence information is coming through having this face-to-face conversations with entrepreneurs. So we had to be flexible and had to think really outside the box, kind of throwing, in the past, I would say we would never outsource due diligence. That's something that we held very closely, because ultimately, if we're going to make an investment decision, we want it to be on the basis of our judgment. But in this case, we really had to think very carefully about, what can we outsource so that we're not sitting on our hands for 1 year, waiting for borders to open and for us to travel.
Thank you very much. I hear from Julian and yourself the role of partnerships in enabling you reach out to your market and figuring out, re-engineering your routes to market. Thank you very much. Let's move on to Mr. Clive Musipa and hear the Untu story, as well as the Zimbabwe situation during the pandemic.
No, thanks, Andrew, and good afternoon again to everyone. So our experience really was just before the onset of the pandemic, COVID-19. We had a set of monetary experiences in the country, and specifically Zimbabwe had been dollarized for a very long time, close on to 10 years. We then got out of using the US dollar as primarily the sole currency, and then moved to using local currency. So within the ensuing year before COVID-19, we had a period where the country generally used the local currency for a 12-month period. That came with its own macroeconomic challenges. I think at that point, Andrew, we had made contact with TDB and had already started our discussions on putting together a guarantee facility. But in maybe painting the context much better, we went through a period of volatility where, for a 12-month period after the introduction of the local currency, we did experience very high levels of inflation before all of that tapered down. So in a sense, by the time COVID-19 came, we had gone through a pretty volatile period. And as a business, we had already started on the journey of really streamlining a lot of our brick and mortar and really rethinking our business model, within the context of a pretty volatile economic environment. At the point at which COVID-19 started, we were privileged as an institution to have been in a pretty strong position from a capital point of view. And at that point, I would say things had also started to settle a little bit in Zimbabwe. One of the key outcomes of the COVID-19 pandemic from a policy point of view that affected our business and maybe the economy, I'd say, positively, was the reintroduction of the US dollar. And currently, we do have a macroeconomic environment where you can use both the local currency and the US dollar. That's brought a lot of stability. Turning to our institution and the specific impact that COVID-19 had, it found us having gone through this period of turbulence, but it also found us after we had started rethinking our digitalization and rationalization of our brick and mortar. We were also able to continue to support a lot of our SMEs after the economic environment stabilized. We obviously had to navigate an intervening period of a hard lockdown, and that came with a pretty significant impact on our portfolio. Our portfolio quality did deteriorate, as one can imagine, during that period where we had a very hard lockdown. In the hard lockdown period, movement was restricted, borders were closed, and I would say that lockdown really resulted in very limited trading hours for businesses that were allowed to operate. So only businesses in what were termed essential services were allowed to operate. and only a small fraction of our clients, were in those essential service, or were in that essential service classification. Post the end of the hard lockdown, I think across the economy, the virus was obviously novel, it was new. There was a lot of uncertainty, and quite naturally, the impact in terms of the economic impact and lost revenue was very, very significant. And as a lender, we had to sit down with a lot of our clients and really give them time and understand their businesses better, and work through a lot of the situations that had been caused by the lockdowns and the unenviable decisions that policymakers had made in terms of navigating this trade-off between health risk and the economic impact of the lockdowns. I would say we're quite fortunate in navigating that quite well, and we're able to go back into the capital markets and issue corporate bonds in the third quarter and the fourth quarter of 2020. And I would say for a period of about 4 to 5 months, we did see demand start to pick up again. But I would echo some of the the observation and the sentiments that some of my colleagues had highlighted earlier on. I think it was Lillian who was talking about their experience in Kenya. And we had a similar experience. Customers were also very uncertain about the future. And a lot of the demand was on the shorter end of the loan tenure spectrum, if you like. And clients really wanted to play it safe, have very short-term loans, and just see what was going to come next and be very, very cautious. So that obviously did restrict, our growth ambitions. And, as an institution, naturally, we were also very cautious. Going into 2021, we did experience another hard lockdown, and this was brought about by the South African variant, as it was called, that came through in sort of December and January of 2021. So again, that did impact our portfolios, quite significantly, and our portfolio qualities obviously, went out of range in terms of our usual, operating metrics. I would say we had some experience, in the prior year, and that came in handy as we, pretty much redid what we had done, the year before, and we navigated that, pretty well. The impact for us from a funding point of view, I would say before COVID-19, we used to get a fair amount of our funding from, it was a mix between both the banks and also the debt markets through our corporate bond program. But I would say the banks were largely very, very cautious coming out of, at the onset of COVID-19, and a lot of that risk aversion was still very evident. But we've been able to get pretty strong support on our corporate bond program, and that's pretty much helped us rebuild, our portfolio and get back on track in terms of, maintaining the level of growth that we'd actually envisaged. So I would say, Andrew, in a nutshell, our experience is a bit unique because of the economic turbulence that preceded, COVID-19, and in a perverse way, it kind of prepared us for another shock, that came through in sort of late, 2019.
Thank you very much, Clive. A very difficult situation pre-pandemic, and a combination of the situation and several lockdowns. So I can only imagine what you've been going through in Zimbabwe. But again, as a person who's also lived in Zimbabwe, I can imagine that there's a lot of innovation that has come out of this environment, and we'll be able to talk to that in the next segment. In a few minutes, Taz, please speak to us about your situation. Here is a new DFI setting up in Malawi to service a range of customers, and then the pandemic. What happens to your projections? What happens to your pipeline?
Thank you, Andrew. I want to touch on two sides of the situation we faced. One on what we faced as a business, trying to raise new capital, mobilize capital for the market, and then two, the impact on our clients and on our pipeline. Just to remind you again, Mike is a local DFI, and as a DFI, we occupy this space where we have to behave counter-cyclically. We have to support growth because of our development mandate. So where there are challenges in the economy, where there's a downturn in the economy, we are supposed to be supportive. And you can see that tension, because in trying to be supportive, you are going to take on more risk, of course. So that's the tension we faced. Now, as a new DFI, now going towards our third year, we had taken the view, I would say 6 to 8 months before COVID, to launch our own capital raise to, strengthen our balance sheet, our core capital. And just as COVID began to gather steam, and as we just heard, as the South African variant started to be felt, we were going out to the market and we were thinking, should we hold back? Should we postpone? We took the view that no, we should carry on with our program of capital raising, and surely it impacted investor sentiment, and many investors held back because of just the uncertainty. So that meant we were negatively impacted in our ability to raise capital, and it's taken a good 12 months before investors have repriced, if you will, the risk and have begun to come back. And I'm glad to say we're seeing some pretty positive signs vis-a-vis our own capital raising. Quickly moving to our clients and our pipeline. And in mind of what I said, that we're supposed to be supportive, we've got key clients in areas such as tourism, and it's no surprise that they were badly affected. So in those areas, we really had to look closely and say, has this shock fundamentally affected the business, or does it have scope to bounce back? And where we saw that you still had a strong team and they would likely ride through this shock, we decided to restructure some of those loans to really support these businesses and help them through that period. The other businesses, the other clients that were equally affected, we do quite a lot in terms of agro-processing, agribusiness, and these clients rely heavily on importing their machinery and equipment from China in particular, China, some being India. You all know how badly disrupted the supply chains and the logistics and the costs of containers have gone up drastically. What this has meant is that their ability to bring that equipment back and to start their operations was delayed, impacting their cash flows. Once again, we had to look at those loans and say, how can we support these businesses? Let's extend for their moratorium or grace period to allow them time to bring that equipment. So we've really had to be quite flexible to allow those businesses to keep going. But of course, as others have also said, there was an issue of supporting liquidity in the market. Really, as a DFI, it's about broadening access to finance and helping SMEs get access to that finance, particularly during this difficult time. So we're very grateful, of course, Andrew, that TDB has responded positively with that facility of $1 million, which will be flowing in the near future. But also other partners such as World Bank have given us those facilities that we are deploying specifically as a response to COVID. In that instance, what we're doing is having to be creative with some of the security requirements. What kind of collateral will we allow these SMEs to bring to the table? Can we look at things like invoice discounting? How can we ensure that businesses that have a sound business model and ordinarily do very good business, how can we support them during this very difficult transition? And as I say, for a DFI, that means being a little bit more flexible, looking at how to adjust issues around moratorium period and collateral requirements, and so forth. So thanks for that, Andrew. Back to you.
Thank you. Thank you very much, Taz. It's good to hear stage for a country as beautiful as Malawi, and given the fundamental importance of lending to the agribusiness sector in your market. Well done to you for rethinking your business model. Now, to our next session and the last session of this afternoon, the last segment of this session this afternoon is more or less about building back better. And I know that as each of you spoke to the challenges and how you've gone through the pandemic, you typically started addressing some of the questions that I wanted to pose to you. But again, I want to speak to the role of technology in an MFI like Untu, and the role of technical assistance, Lillian, Julian, but also importantly, how you then look at lending from across the seas. You're raising funds, Taz. So we would like to appreciate how your businesses in particular are building back better. What plans have you put in place? How are you pivoting? We would like to appreciate whether you're developing alternative finance products and how you're leveraging government facilities. Our time is running fast, but I will give at least 3 minutes to each of us to talk to us about these opportunities. I'll start with you, Julian. 2 to 3 minutes. Thank you.
Okay, thank you, Andrew. So for us, what we've done, and what I've seen also with the SMEs that we're interacting with, it's mainly use of the channels that are there and others are developing, like digitization of business, where companies have resorted into providing solutions by online channels. So we are leveraging on technology to reach our clients, to be able to push our products, and also to connect with their clients. We also leveraging on the distribution channels that are there. We've seen very many distribution channels coming up. Companies like Sandy, we've seen other companies that have really come up during this period that SMEs have been able to use to adopt to be able to push their businesses and push their supplies. And then also there has been a lot of the adoption of the online payment channels. So for us, as I said, because we came in during COVID, so we came in when clients could not go to the bank, mainly to do the banking. So we had to come up with the apps and technology, be innovative on how to disburse the funds to the clients, how the good ways and the easy ways for the clients to be able to pay back their facilities. So use of technology has been very good. And then in terms of just to touch on technical assistance. So for any company that is really looking into supporting the SME sector, the technical assistance is really key. And for FCAN, we are not a DFI. We are a commercial company, but we also have an impact aspect, especially because of the shareholders that I mentioned. So technical assistance is very key. And this is because it's important to SMEs. Because sometimes you find that they actually do not need financing. What they need is just to be supported and to be given that technical assistance to be able to manage their finances. So what we do currently is just to try and work with these SMEs. And technical assistance, what it does is to help with the cost optimization by ensuring that the farm only pays what requires. So we seek to review the company's leakages when we're working with the clients. We seek to see how they can reduce their cost, and that's the same thing with ourselves. And this can be mitigated mainly through, or the intervention can be through use of technology. The other importance of technical assistance is it enhances specialization and helps the customers to focus on their key responsibilities of their core business. And we also assisting them to see what they can outsource. You don't have to do everything. So we are also teaching them how to outsource part of their businesses. And we are also doing the same also as an SME. And also development of the interactive consumer interfaces that are there, the UX, CX, with reference to the latest global practices. So this has ensured that the customer is more comfortable transacting online with us and with their other clients than visiting the branches and their other locations. So process adoption and in-depth project management practices that have been used widely to facilitate fast customer acquisition for us. Thank you.
Thank you, Julian. Lillian, how are you building back better at the Grassroots Business Fund?
Yes, so I think if there's one thing the pandemic has taught us, which is a positive impact, is really the need for all businesses, big and small, to be well prepared against emergent threats and to think strategically beyond sort of the immediate day-to-days, which sometimes SMEs struggle with. So some of the key themes that we're really trying to work with our companies on would be, for example, how are they thinking about threats around climate change? Really working with especially our agribusinesses and the smallholder farmers who are linked to them to try and understand how we can make the value chain more resilient to the issues around climate change, which we know have really impacted supply and have made agriculture supply in certain cases, especially if you're dependent on smallholder farmers, to be quite unpredictable. So we see that as an emergent issue that no SME can get around. We're also really working closely with our companies to help them understand how to fully optimize both internally and in their supply chains to ensure that there's gender equity. There's so much research that's coming out right now that time and time prove that where women in companies and in value chains are valued, we see that returns are higher, certainly returns to us investors higher when we take a gender lens approach. So those are two sort of emergent issues beyond COVID that we are trying to impart on our companies, again, through the use of technical assistance, which for us, I think will continue to be a blend of face-to-face, relational, hands-on technical assistance. And definitely this time around, we experimented with virtual SMS, USSD-based training and web platform-based training. So I think there's still scope for that, but mostly I think it will be a hybrid of those two. Again, working with our companies to help them be more prepared for the issues of the future, but be prepared for them now.
Thank you, Lillian. And to our guests, please keep the comments coming and keep your questions coming through the chat so that we can use the last 5 minutes to respond to them. And Clive, what is the future you see at Untu, and how are you pivoting in our Harare environment?
No, thanks, Andrew. So I would say we've so far navigated this, pretty well. You spoke earlier on of this financing deficit at the SME stage, globally, and we're seeing it here, and it's obviously been pretty pronounced, post the pandemic. So we do see an expanded market. We have seen some interest that had come into the sector that kind of withdrew as it perceived the sector to be high risk. So from a competitive point of view, we do see a much larger market, and we do feel we can take a bigger portion of this. In terms of our operating model, I would say we were forced to deepen our corporate bond program and just diversify our funding sources. And I think that will obviously serve us very well in the future. From an operating model point of view, we are widening our channels, to allow customers to reach us, through the channels that have been described earlier. But also we're rethinking how we've traditionally, approached our assessments and our interactions, with customers. And a lot of this has been, very heavy touch, as in SME finance. So those are the things that we currently, occupying our minds as we, think to the future. But what's certain is there's lots of opportunity, and there's obviously economic growth that's coming through. at the end of this pandemic. And for those players that have survived, I would say we are looking to the future with a lot of hope.
Thank you. Taz, I'll give you a minute.
Sure.
Sorry for giving you a minute, but I'll bring you back as we close.
Right. So, yes. Andrew, let me proceed. I'll be quick. What we're doing is we're pivoting towards climate finance and green and clean energy. Whatever investments we look at now, whatever size, even for the smaller SMEs, some of them are doing eco briquettes so that we stop cutting down trees and start converting, say, farm waste into briquettes. By ensuring that all the investments we look at have got a strong element of either clean energy or environmental sustainability, that allows us to really position ourselves as an aggregator of green projects in Malawi. And as you know, with COP26, there's a whole pool of capital that's going to be looking for smart, innovative, technology-driven, climate-sensitive, climate-resilient investments. And we're going to be the main gateway for that as Mike. So that's number one. Number two, and finally, is we're deepening our partnerships. We're working more with the local commercial banks. We've signed a partnership very recently with Agra to work with agro dealers. That allows us to leverage their expertise. We've also signed an agreement. We're working with GIZ. And then, of course, as I already said earlier, with TDB as well and the World Bank. So I want to echo what Julian said. We don't have to do everything ourselves, right? This is the time for smart partnerships, sharing the risks and focusing on what we can do best. And what we can do best is source the deals, prepare them and aggregate them. And in so doing, attract that green climate finance that I mentioned earlier. Thank you, Andrew.
Thank you very much, Taz. I see that you're already tuned into the resolutions of COP26, and that definitely there's scope and opportunity in this market. It will be good to see how this unfolds and how we can even partner going forward. Let me take the opportunity to let our delegates know that at the Trade and Development Fund, we are also at the turning point. We are in the second phase of our growth model. We are actively fundraising and building a pipeline, and would be happy to hear from microfinance institutions, tier 2, tier 3 financial institutions, as well as SMEs that have a need from $500,000 to about $5 million, and will be active in the market early next year to deploy the capital that we will have raised. So we look forward to hearing from you and connecting with you as we conclude on our next level pipeline. Now, as we close our session, I want to still go around, and perhaps this time I'll start with Clive. What would be your parting thoughts? I hear from all of you. You're very smart entrepreneurs and business leaders, and you look at opportunities. So there's expanded opportunity, smart partnerships, adoption of online platforms, resilience of value chains, taking training online to meet your clients so that they don't miss out the benefit of your technical assistance, expanding markets, deepening or diversifying sources of funding, among other things, and rethinking client assessments. What would you tell your regulator in your spaces to do better going forward in closing? Plus any other parting thoughts in a few seconds. I'll start with Clive.
Thanks, Andrew. I would say there's a lot of change that has taken place. In terms of the channels that we use, the products that we are actually offering, and the landscape itself. And a lot of the regulations obviously still need to catch up. And the market in many instances has moved. Certainly in where I operate, ahead of the regulator. One of the challenges that we did experience really was the distribution of government stimulus programs. And it became very apparent that, especially for SMEs and MSMEs, there's a need to build a very secure distribution channel. And I think technology is the answer.
Great. Julian?
Okay, for me, I'm very passionate about SMEs. And for me, what I would say is that for financial institutions, because I think every other financial institution is talking about supporting SMEs. And so what I would say is that they need to be intentional. So anyone who says that wants to support SMEs, they need to be intentional in terms of the way they're approaching it. They need to be to allocate, being specific in the way you are looking at the SMEs and support for SMEs. If you want to support SMEs in a certain sector, then allocate specific funds for that sector, and then follow up and make sure that that money has actually been used by this sector of SMEs. And also for financial institutions also to also address the capacity building challenges that their clients are suffering for. Yeah, thank you.
Thank you, Julian. Taz, quickly.
Yes, very quickly. It's to pay greater attention to the non-traditional or alternative sources of finance, which we can channel through innovation to SMEs. And I'm thinking in our environment, for instance, pension fund managers are having difficulty because of the restrictions from the regulators. And what regulators need to see is that internationally, there's a big move and emphasis towards ESG. It's all about sustainability, governance. And if we can encourage these domestic pools of capital to channel funds towards ESG, then what this should result in is better impact on the ground and greater efficiency. So it's all about ESG, and regulators should really try to relax the restrictions. Thank you.
Thank you very much. Lillian, in a few seconds.
Yeah, I'd say engage in dialogue with alternative finance providers like ourselves who are coming in, providing complementary products to banks, and hear out some of the issues, reduce our costs, things like withholding tax, allow for inflows and outflows of capital to foreign lenders to be a bit more easy. I think we're coming into the market providing products and that are needed and that are in short supply, especially to SMEs who aren't able to access this kind of products.
Thank you. In 2 seconds, Clive, how has your regulatory capital been impacted by the situation? Are you having to have negotiations with the central bank around these issues?
So sector-wide, the short answer is yes. This has been increased, and those negotiations are ongoing. But in our specific instance, I think we've been well above the regulated level.
Great, thank you, delegates. Thank you for keeping up to the hour, and I must thank my panelists for the very, very interactive session we've had. And we look forward to leveraging all these build back pointers into greater businesses come next year. To all of you, thank you for joining us, and bye-bye.